We saw big changes in global petrochemical available capacity last week. However, this week should end quietly. The Petrochemical Weekly update starts now. If you haven't had the chance, check out this article. It's getting uglier in stock markets as fears about inflation spark a brutal drop. David Gura from NPR writes about the declines in the Dow Jones Industrial Average, S&P 500, NASDAQ, and even cryptocurrencies, and what inflationary pressures may have on the economy as a whole. After reading this article, I turned my attention to the U.S. Energy Information Administration's short-term energy outlook. As you can see here, there was a significant run-up in WTI crude and gasoline prices from 2020 into 2022. However, the EIA is forecasting crude and gasoline prices to come down in 2023. This begs the question, is the energy transition to blame for higher prices? Daniel Graeber addressed this in an article written for Industrial Info Resources. He wrote, "Debate over the rising price of commodities continues, with the head of the International Energy Agency saying transition to a clean energy future is not the cause of runaway inflation." When I want to understand the sentiment in the industry, I often turn to future quotes. Here you see the Mount Belvieu Ethylene or Opus PCW future quotes published by the CME Group through June 2023. To be absolutely clear, futures are not a forecast. Futures are the price that someone would buy or sell a commodity today for settlement in the future. The curve has what is called a backwardated structure, meaning that the current price is higher than the prices in the future. This is a sign that there is more demand today for that commodity than what is expected in the future. In other words, the sentiment is that the ethylene market is strong. So you might be wondering, what does this all mean for petrochemicals? If you are, then the Petchem Global Market Intel Advisory, delivered by the Petrochemical Strategies Expert Network and supported by IIR Energy and powered by i2 Enabled, can help. If you have questions and want answers, ask me. You can reach out to me directly through my website, petrochemicalstrategies.com, or to the IIR Energy team by email at iirteam@iirenergy.com. Both addresses are shown on your screen. Let's look at petrochemical capacity developments over the past week and what we can expect to see by the end of this week. The start of day dashboard shows the available petrochemical capacity for the week ending January 21st, 2022. Last week, we saw an increase of almost 20 million pounds per day of product capacity in Asia, most coming from the Yanbu National Petrochemical Company and petrochemical complexes in Kuwait, Iran, and China. This was offset in North America, where 18 million pounds per day came offline, mostly due to a 70-day planned turnaround at LyondellBasell's 2.6 billion pound per year QE1 ethylene unit in La Porte, Texas, and a reduction in online capacity at Shell Deer Park. By the end of this week, the only changes in global online capacity are in Asia. Iran's Morvarid Petrochemical Company will start a 25-day turnaround on January 27th. However, this offline event is offset by gains in online capacity in Japan and China. Let's turn now to the headlines. Maintenance projects in the chemical processing and oil and gas industries are normally routine events, scheduled months if not years in advance and performed with clockwork efficiency. But the ongoing COVID-19 pandemic has knocked potholes into these otherwise smooth roads, with labor shortages, equipment delays, and shaky commodity prices putting the brakes on typically unexceptional shutdown, turnaround, and overhaul projects. Industrial Info was tracking more than 1,100 chemical processing and 630 oil and gas maintenance-related projects in the US and Canada that are set to kick off in 2022. On January 20th, Shell completed the sale of its 340,000 barrel per day refinery in Deer Park, Texas to Pemex. The facility was previously jointly owned by both companies. It is operated by Deer Park Refining Limited Partnership. After about 2.5 years of construction, ExxonMobil Corporation and Saudi Basic Industries Corporation, or SABIC, have completed their world-scale petrochemical project in San Patricio County, Texas, near Corpus Christi. The facility will produce nearly 4 billion pounds per year of ethylene, which will be used as feedstock for derivatives, including polyethylene and monoethylene glycol. But the question remains, with this $9 billion plus project wrapped up, what other large chemical processing projects are out there? Thank you for watching the Petrochemicals Weekly Update. If you have any questions about anything you saw here today, just ask me. My name is Robert Sawchuk, and I will see you next time.